Welcome one, welcome all to DeFi Crypto and Airdrops. I can't tell you how excited I am about this new Wednesday show that we're going to be doing with both David and Jake. Jake is from Luminary Assets. Those that aren't familiar, he is the mastermind behind that has driven Metrics Finance. If you haven't checked it out, I highly suggest you do. If you're in DeFi and you're looking to track your portfolio, it is a very, very powerful tool. We'll talk about that a little bit here in a minute. And then David, those of you that aren't familiar, he was previously with Crypto Labs Research and has since branched out on his own and started a DeFi academy or DeFi school with a K. And we'll be sharing that here in a second. How you doing, gentlemen?
Doing great.
Doing great.
Awesome. So real quick, I'm just going to go through our socials real quick. So if you're not, watching on DeFi Crypto and Airdrops on YouTube and want to join the chat, by all means, please, go to our channel and subscribe. We have Jake's channel. He puts out really, really great, a little bit shorter, easier to digest content, around, 10, 15 minutes. I get a little long-winded on mine and go about an hour or two. But he gives great, very focused content when it comes to, learning about DeFi. Highly suggest you follow him. And then, of course, David has the DeFi University. Links are in the description. But another great place to go. He's just started building it out. So it's still very new and he's building his community. I'm definitely going to be working with him to get the good word out because he is probably one of the most knowledgeable people that I've run into, from start to finish when it comes to DeFi and, just being able to break it down in a very easily digestible format and also able to step it up and really give the alpha on advanced strategies. So, with that, let's go ahead and kick it off with DeFi Llama. Every morning I love to open up, as soon as I get up in the morning, make my tea, my coffee, I always open this up and see what the market's doing. As you can see, we've been steadily building over the past month or two as far as TVL across all DeFi. If you're not paying attention, you definitely want to keep an eye on this, both TVL and DEX volume. It's, if you haven't been in DeFi that long, volume is where we make our fees. So if the volume isn't there, you're not going to be earning as much. So this gives you a finger on the pulse of DeFi overall. After that is RWA.XYZ. This is real world asset tokenization and what's going on there. This will give you all kinds of analytics if you are investing off of data and not social media posts and emotion. This is where you want to be. So anyway, just wanted to share that. So we talked a little bit before we went live, and we decided that today we want to talk about where we are at currently in the cycle and how to best position yourself to where you can maximize your profits and what type of DeFi positions that you want to be in right now to ensure that you are maximizing your gains, for the rest of this bull cycle and leading up into potentially, the pullback and the bear market that we have seen in past cycles. So, David, why don't you kick us off and kind of give us your feel for where we're at in the cycle and what you're doing personally to maximize your earning potential right now?
Sure. Yeah. So where we are in the cycle is at the end. That's at least if you believe the Bitcoin halving cycle analysis. And I think that there are a lot of people in crypto and DeFi who adhere to that analysis. So if it's correct, then we should see some type of a Bitcoin top, maybe by Halloween or something like that. So if the Bitcoin halving cycle analysis is correct, the rest of this month should be green. Maybe we get some type of a correction at the end of this month, September tends to be red in the post-halving year, and then October, November, that's all she wrote. Bitcoin puts in its top, and then we roll over and enter a bear cycle. So that's if you believe the halving analysis. Now, I think that enough people believe it for it to be true. So what am I doing? Well, I take a look at BTC, right now today, pushing up towards 123K, pushing up to the all-time highs. Now, we all know that Ethereum has been ripping over the last couple of weeks. And so what that looks like to me is that first rotation, the rotation out of BTC into ETH. Now, we do have a little bit of a inflection this cycle in that we have all of these Ethereum treasury companies on Wall Street that are buying hundreds of millions of dollars of spot ETH every single day. So for me, when I see that, I expect these guys to not be paper handed. I expect them to hold their ETH even through a 20 or 30% pullback. So I think that these Ethereum treasury companies are going to be almost like volatility dampeners. I think that the ETH ETFs are also going to function as volatility dampeners because we've actually seen that with the Bitcoin ETFs. The Bitcoin ETFs, when they launched on January 10th of last year, Bitcoin's vol was sitting at like 60%. And you can track this over at Deribit. That's one of my favorite places to go take a look at volatility for Bitcoin and ETH. So Bitcoin's vol is at 60% in Jan 2024. It's now below 40%. So after the launch of those Bitcoin ETFs, they really have reduced the volatility of Bitcoin. I expect the same thing to happen with ETH. So we've seen the first rotation out of Bitcoin into ETH. Now, I think it's just a matter of waiting for ETH to put in a fresh all-time high until we see the next rotation out of ETH into large caps, and then from large caps into mid caps and small caps, and then back into Bitcoin. Now, what I'm looking at and what I'm doing is I'm levered long. Okay, so I've been levered long on ETH since 1400, literally from the lows at 1340. Um, so like look, I wrote it all the way down and I've written it all the way back up. So now that we're sitting at 4760, I'm still levered long. And I really do think that we're going to be putting in a fresh all-time high here in the not too distant future, because when you take a look at the S&P, you take a look at the Nasdaq, they have both broken out to fresh all-time highs. And when we take a look at rate cut odds, it looks like a 25 basis point cut is all but assured in September. And so now we're looking to the next payrolls print and the next couple of CPI prints to see if market participants start pricing in a 50 basis point cut. So it looks as though the next couple of months here are shaping up to be really, really big for digital assets and for TradFi. And so what I'm looking to do next is lock in my profits on ETH and take a look at some base plays. I'm really bullish on the base chain and the base ecosystem. And I've got a handful that we can talk about later on in the call. But yeah, I'm just getting ready to rotate out of ETH into some large caps, mid caps, and small caps. So,
All right. How about you, Jake?
Couldn't have said it better myself. Although I will create a counter argument to that.
I love it. I love it when it's not an echo chamber. So please.
Yeah. Well, like again, I'm big on the halving cycle. I follow that theory. That's what we've seen in the past. That's what I think we're going to continue to see. As David said, if enough people believe it, we will see it, because that's how technical analysis works. That's how fundamental analysis works, right? If people believe something, then they're going to trade with that, right? The one caveat I would say, and this is something that everybody has brought up, right? And everybody has considered, is like, well, we do have institutions this time around, right? And then also when you look at the economy, compared to previous cycles, and there's a great chart. I can actually just send it in the chat, I think.
Well, you should. I mean, you should be able to share your screen, and I can put it up.
Yeah, let me do that here. Let's see. Um, Okay, awesome. Yeah, so what this chart essentially represents is like Bitcoin price in M2 money supply, and then the year over year growth, basically. And what we typically see is when M2 money supply is going up, right? Bitcoin is going up, immensely and typically outperforming. So you could see these periods where we saw very, very strong year over year growth, like right here, right here, right here. We haven't seen that
So
this market.
real quick, those of you that don't know what M2 money supply is, it's basically the liquidity. It's the cash that's in the system. So whenever you see that liquidity go up, you risk on assets go up like crypto. Sorry, go ahead.
Mhm. No, exactly. Yeah. So M2 money supply is like classified as assets that aren't liquid but can easily be liquid. So money in your
Okay.
savings account, money in money markets, money in CDs under like 6 months, right? Stuff like that. That's what M2 money supply is classified as.
The money printer.
Um, yeah, exactly. Like, is this, and obviously the kind of concept behind it is, well, when there's more money that's like easily liquidatable, right? Like more money in these short-term CDs, savings accounts, people have enough buffer in their checking accounts, in their day-to-day lifestyle, to be able to afford their lifestyle. So they don't have to be like drawing from their savings. They actually have money that they can put in their savings. So when you see immense growth with M2, typically you're going to start to see more people start to invest into markets, whether it's crypto, whether it's stock markets, whether it's private equity, whatever it may be, right? You're going to see more investments during those periods. So when you look at this chart, you could easily see that there was like a flip all the way back in kind of 2021 when we saw COVID. Because all of a sudden, we see that bear market come in after we just topped out for Bitcoin. And at the same time, we see the economy completely flip on its head. Now that we're picking back up, now that M2 money supply is starting to get a little bit better and starting to grow at a faster pace, there is the argument to be made that, hey, maybe we do enter a 5-year cycle where we top out kind of first quarter, second quarter of next year. But as far as my analysis goes, I'm in line with David with kind of the halving cycle. That's what I'm playing it by, because I'd rather be safe, maybe miss out on an extra 20, 30%, than go for that extra 20 to 30% and write it down all the way. So, yeah.
No, better to be safe than sorry, definitely. Well, and as far as what I'm doing, it's I pretty much just have my ladder out strategy. I've been very conservative. Oh, all right. Let's. I've been very conservative in kind of how I've set up my strategy. I'm just looking to, at this point, 7x, maybe 8x my portfolio because I've already multiplied it a couple times. 10x was my goal. But I have my take profit points already mapped out for all my different assets. I have 5 different levels for each asset and a percentage for each one. And I have my spreadsheet. But I'm just kind of going off that. And if I don't hit all of them, that's okay. I started out with a certain amount of money. I'm, pretty much as long as the market does anything, I'm guaranteed to get out with more than I started with, and I'm okay with that. But I am not looking to make millions. I'm just looking to make a couple hundred grand that I can have in stables that I can earn 10 to 20% on, have that as my treasury. I have 4 to 8 grand extra per month that I have coming in, and just each month that's that's a good amount of money in dry powder that I can build a new DeFi portfolio into the next bear market. If we get that pullback, if we don't, doesn't matter. I'm just going to start buying Bitcoin, start buying good solid projects, and again, it's OPM, other people's money. So I'll never touch the principal. I'll only use the yield, and it will just be sunny skies and clear sailing, hopefully. But let's talk about you guys both brought up a really good point, and it's something that I've been talking about for a while. Is we historically, for the most part, crypto has only been retail. Reason being that there was no regulation, there was no guidelines that it didn't allow institutions to get involved in crypto. And those that had governments, institutions, they even if they wanted to, they could fiduciaries. So now that we have stablecoin legislation and a lot of jurisdictions are starting to establish those guardrails, and that institutional money starting to flood in with tokenization of real world assets and things like that, that liquidity, the potential for the liquidity that's going to come in the markets, how do you think that that is going to affect the 4-year cycle? Is it going to flatten it out? Is it just going to be a whole new animal? I mean, kind of what do you gentlemen think? David, what are your thoughts?
Yeah, so I think that institutions entering the crypto space and the DeFi space, I think that large institutions, buying up Bitcoin, buying up ETH, buying up other tokens, I think that that's going to function as a volatility dampener. Um, Let me give you an anecdotal story here. So a couple of years ago, Mike and Jake, I was over at Bank of America and I was opening a business bank account. And I asked the question of the banker, hey, can you trade Bitcoin or crypto at B of A? Are there any products that are backed by crypto, anything like that? In hindsight, it was a really silly question. In previous administrations, crypto in the United States has basically been illegal. There's been no regulatory framework, so banks can't touch it. That has all changed with the Genius Act, with the Clarity, I think it's a bill, right? Clarity Act, Clarity Bill, whatever.
It was a
So
clarity act, yeah.
yeah, Clarity Act. So um, it seems as though within the next couple of months, we may actually be able to custody crypto assets at bulge bracket banks. So you could go to Chase, you could go to B of A, you could go to Wells Fargo, deposit your BTC, and maybe even spend against it. Um, and that's just the very tip of the iceberg. So I think that now that crypto is legal, and there's a regulatory framework for how to custody it. I think that we're just going to see adoption grow from here. So, as much as I know people believe in the halving cycle analysis, I really don't. I don't think that it ever really made sense. I think that the halving cycle analysis is curve fitting at its best. And it's very compelling because if you can say, oh, well, in the previous cycles that we've had, after a certain number of days after the halving, this event takes place. The problem with that is we have 3 data points. So, like, in the first cycle, was that even really a cycle? Like, it was just Bitcoin. You didn't really have anything else.
Yeah,
The
yeah.
second the second cycle, um, oh, okay, Ethereum, launched in 2016. So the second cycle, you know, the asset class was much, much, much smaller than it was even in the third cycle. And then in the third cycle, what did we have? COVID, a once in a 100-year event where the Fed printed $4 trillion in 18 months.
Yeah.
So, and people were forced to stay home and given checks. And what did they do? They bought shit coins, So I think last
And
cycle
cartoon
maybe,
monkeys.
yeah,
Yeah, cartoon monkeys.
turns
Don't
out
forget about them.
turns out those punks have actually held on to their value a little bit. But um, you know, yeah, I remember when people were buying pictures of a rock for 100 ETH last cycle.
Yeah.
It was insane. But yeah, I'm not really a big proponent of the halving cycle analysis because there are 3 data points. The first one isn't real. The last one from last cycle was totally skewed by COVID. And the
Mm,
second one, Ethereum didn't really even exist. It like had just launched.
yeah.
So to say that, hey, 600 days after the halving, that's when we should see a Bitcoin peak. Now, in today's environment, when Wall Street is buying $1 billion of Bitcoin and $1 billion of ETH every day, and there are all of these products that function to dampen volatility, I think that we're probably going to put in a peak in October, but I don't think that we're going to enter a negative 80% bear market. I
Oh yeah,
think that
yeah.
bear markets are going to be the troughs are
Muted.
going to be more shallow. Yeah,
Yeah,
Mhm.
yeah,
it's gonna be muted for sure, in my opinion.
Well,
me too.
I think it's all the concept of diminishing returns, right? We go up less, we go down less at the end of the day. And when you look historically, I I don't know the exact number, but I believe one of the cycles, the one where Ethereum came in, it was an 80% decline for Bitcoin. And then the one after that, the COVID cycle, it was like a 70 something, like a 72, or maybe it was like 68% or something like that. Right. So when you think about that logistically, well, we're not thinking it's going to be 60%. Like I'm thinking we see at peak like a 50% pullback on Bitcoin, which even then you think about it, it's like, oh, Bitcoin's at 60 grand. Like, you've been holding since the bottom, like since 30K, you still at a 2x when you go down 50% from that instance. And that is, of course, if we were at the peak right now, which I'm expecting 150, which would put us at 75K if we were to kind of decline 50%. And I have a friend over at a institution, or like a crypto hedge fund, I guess, and they have about 80 million under management, and they're looking at basically $180,000 as the peak for Bitcoin, and the $7 trillion overall crypto market cap. So lower
Okay.
dominance, more money flowing into Ethereum, more money flowing into Solana, and other high cap assets, and then also more money flowing into altcoins.
Nice. Yeah, that aligns with a lot of what I'm hearing, in my circles. A lot of what I've heard is Bitcoin pulling back into the 90K range is kind of what I've been hearing from a lot of people. But I definitely agree with both of you, that I think that we're at that precipice of moving from a speculative market to a utility market. But one thing that I want to point out to everybody out there is, with that, you are going to see a huge culling of a lot of these projects that have been saying that they can do certain things, or promising they can do certain things, or that they are building really good projects, but just nobody's building on them. There's definitely going to be this moment.
I think Mike cut out there, so
Yeah,
you're
his
taking over.
audio cut,
We
cut
stole his
out for a
stream.
sec. Yeah,
No,
but
but
what he's saying is totally
Yeah.
valid, right, Jake? Don't you think? I mean,
yeah,
about the projects that
Oh,
are
sorry, I cut
good
out.
businesses. Oh, there you are, Mike. Yeah, you're
Yeah.
back. We lost you for a second.
yeah. Might have lost him again. But yeah, I think projects that are good businesses, they will stay. Projects that aren't good businesses, they will either see a huge decline, or B, just get like left behind, depending on where they're at. Like they have $500 million market cap. The whole market might 2-3x in market cap, but they stay at a $500 million market cap. So in theory, just left behind. And with the inflation behind a lot of these projects, and that's something that I want to talk about today, because not a lot of people understand, like, crypto has inflation. Like, welcome to a world where Ethereum has an infinite supply, just like the US dollar. Solana has an infinite supply. Good thing about Ethereum is it's managed with the burns and stuff like that. Um, Solana, not so much. But the last touch point that I had regarding the halving cycle before we move on from that is, like, Bitcoin, even if we were to follow that same cycle this time around, um, Bitcoin would not follow it going forward, because it's at 19.9 million Bitcoin in circulation, and there's a total of 21 million that can be put in circulation. So you're so close to that, just like finish line. Yet so far away, because you still got a whole nother century, I believe, like 100 years before the last Bitcoin's put into circulation. But it's like there's barely any if they were to inflate the rest of Bitcoin supply tomorrow, that's like what, 20 or 10% inflation, I think. And
Which,
when you look at
yeah,
that over the course of multiple years, it's not bad whatsoever, because that's
no.
that ultimate max. But I'll let you get back to it, Mike, now that you're here.
All right. Yeah, no, I mean, basically, it sounds like you guys, hit the points that I was getting at. Is, those of you that are old as shit like me, remember the .com era. You couldn't, people were throwing money at anything with .com, and when the dust settled, you had, Google, Amazon, there was, Microsoft, there was just certain, large institutions that just rose to the top, and projects like, pets.com and stuff like that became non-existent. So we are going to see the same thing in crypto. Good, solid, fundamentally strong projects that have good, solid backing, that institutions are building on, that are part of the network that's being built are the ones that are going to stand the test of time. And those are the ones that you want to find. And that is why I focus so much on the assets that we highlight to ensuring that they are fundamentally strong. If they have people like BlackRock that are building on them, Plume has BlackRock, World Liberty Fi, Donald Trump's organization, the USD1, their stable coin is on Plume's mainnet. It's just something I'm bullish on as far as DeFi and RWAs, and that's where my focus is. Obviously, Aerodrome, Morpho, Base. In general, I think Base is for the most part purpose built for DeFi. I'm very, very bullish on anything Base. Obviously with Coinbase and them offering anything that's on base natively on their platform and integrating it into their new base app that's about to go live. It's in beta right now and being tested out, but it removes a lot of the barriers to entry for a lot of people that aren't crypto savvy, that don't understand how to use wallets and how to use DeFi protocols and things like that. So they're kind of the first mover when it comes to things like that. So I think that's going to be, very powerful, at least in the short term. Who knows about long term, but at least in the short term for this cycle, I think base plays are going to do quite well. I mean, what are your guys' thoughts on, some of the projects that you are keeping an eye on, and maybe why you're looking at those?
Yeah, man. So I've got a list of a handful of my favorite base protocols. I'll just start off with Aerodrome first and foremost, because Aerodrome is being integrated into the new base app, where whenever you want to swap, you're going to use Aerodrome liquidity within that base app. Now, Coinbase has what, 100 million accounts, something
Yeah.
like that, and they're looking to onboard the next billion people into DeFi and Web3 using the base chain and the
Yep.
base app. So it wouldn't surprise me if Aerodrome really outperforms everything else. But we've got to wait for the rotation, though. You see,
Yep.
there's no difference between being early and being wrong unless you've got diamond hands and you're willing to wait, you know? But
Yeah.
it's ETH season right now. It's not alt season yet. And so
Mhm.
we're still waiting for that next rotation. And so what I'm looking for here to determine when to get into my handful of favorite alts on the base chain, what I'm looking for is I'll take Arrow, for example. I'll price it in ETH terms, and then I'll take a look at that chart. And you could look at that chart in a couple of different ways. You could say, hey, Arrow has not been outperforming ETH, so therefore there's still room for Arrow to run. Maybe it's still a good entry, even with Arrow USD up quite a bit. Or you could say, hey, it's not quite yet time to enter alts, and why don't we wait until maybe after September if there's some type of a pullback after September. Something that comes to mind here is one of the guys that I really respect is Benjamin Cowan. He has
Mhm.
been prescient. So, if the guy can foretell the future, then you probably got to listen to him, right? He was spot on with Bitcoin dominance. He's been spot on for the last couple of years with ETH BTC. And what I'm thinking is that he's probably right about alts having to put in a lower low against their Bitcoin pairs before alts start to outperform everything else and have that 4 or 8 week alt season. So
Mhm.
what would that mean? It would mean that you know you got to be patient. You got to wait and really get ready for your favorite handful of tokens. And here's a list. So Arrow is my favorite by far. And I like Arrow also because you can do things with it in DeFi. Like you can supply it as collateral, you can borrow
Yeah.
against it. There's all sorts of stuff you can do with Arrow. And that's not true for every one of the tokens on this list. It is true for Arrow, though. I really like Moonwell. I like Moonwell just for the card functionality. I like the lend borrow protocol itself. It's not the best. It doesn't give you some important analytics that you get from a protocol like Aave. It's difficult to see utilization rates or where a kink is on Moonwell. It just doesn't give you some of the data that I think you need, but
Yeah.
it's very easy to use. They've got a great card. I think the well token probably does well. It was an unintentional pun there, but yeah. So I like Arrow. I like Well. I really like Morpho. And maybe if we get a chance, we could talk about how we can lever up Pendle PTs or even Pendle LPs on Morpho. Really, really great functionality there. Amazing money market. And I
I'll make
like
a note of that.
XtraFi. Yeah. I like XtraFi a lot too. And here's why. So last year, during the first run higher in ETH in like December, January, February, so December
Mhm.
23, Jan, Feb 24, when ETH was ripping from 2,000 to $4,000, that was when we had our first base season. And there were basically, if there was a token on base and it had a pool on Aerodrome, it was
Mhm.
almost guaranteed to do some, amazing multiples. So XtraFi is something that I'm taking a look at for some type of potential base season. And
Okay.
then when it comes to stables, I really, really like Fluid for the smart
Mhm.
vaults, the smart debt and smart collateral. That is a new primitive. That's a really interesting innovation in DeFi. So if you're looking to do, 20, 30, 40% plus on stables, Fluid is the place to go. But you got to make sure that there's capacity to supply into those vaults. Many of them are capped and filled, which is a real shame. But yeah, so Aerodrome, Moonwell, Morpho, XtraFi, Fluid. I could throw Seamless in there too. But yeah, those are some of my favorite larger cap protocols for base.
Mm. What about
Yeah.
you, Jake?
What
What are your thoughts, or what are your picks? What are you looking at?
you see, I'm not a huge, not necessarily like a huge base person. Not in the sense where I don't like base, but in the sense where
Blasphemer!
I'm in the
It's
wrong
heresy.
territory.
Shun the non-believer.
but but truly, like the thing is, and this is something I see a lot of the times, right? And I do think base will get there, and I think it's already starting to get there. But you see a lot of chains, they pop up, they have great tech, right? Like Solana, they just don't have any good like tokens, like in my opinion, on them. Now, don't get me wrong, there's good DeFi tokens over on base, and there's also good tokens that are being bridged over to base. I do see that now, right? But when base first launched, I think we can all agree, like there was just a bunch of random stuff. It was memes. There was Brett, right? And
Yeah,
Brett
yeah,
is like the meme of base. So
yeah.
it's like, providing liquidity over there never really truly attracted me. I didn't even really go down the whole aerodrome rabbit hole, except for like some ETH USDC to capture the crazy yields that you had over there at the point. And at the time running an OVN position and luckily getting out before OVN
Oh my
uh,
goodness. Yeah.
before OVN got killed. And it's cool because I was in OVN, or not OVN, but USD Plus like year and a half before they even released the OVN token. I'm like, oh, it's cool to see them launch over on base and become one of the largest base projects. So it was. But like with Coinbase, what you're going to eventually see is Coinbase is positioning themselves very, very well for the I guess DeFi takeover, because they understand, like, you can't hate the player, hate the game, right? They understand if you can't beat them, join them, and they know that centralized exchanges are going to be wiped out one day, right? There will be a need for on ramps and off ramps. Maybe there's a day where like you just trade your cash through Bank of America, through Wells Fargo, whatever bank you use, directly through crypto, right? Maybe there's
It's
a day,
possible.
a
Yeah.
couple decades in the future. But the fact that right now, even you can take USDC, and if you use ACH, get it for no fees on Coinbase, right? Bring that USDC into DeFi, transfer it to a DeFi wallet, and pay. To trade Ethereum, you're practically getting paid to trade Ethereum if you use something like Matcha, Llama Swap, or any of the aggregators. Just because there's so many different routes that you can take with that, and they're going to make sure you get the best outcome out of your trade. But there will be a day where like Coinbase is all ran on the base network, right? All these tokens that are listed on Coinbase, you'll be buying them, but they'll be going into your wallet, and that's how they're positioning themselves with the Coinbase wallet. with the base ecosystem, as well as all the other kind of DeFi first products that they're building. They want to make sure that they're positioned for that. And I think one day maybe Coinbase does become a DEX.
I agree with you, Jake. I really do, man. Um, one thing that I would really like to agree with you on is during that first base season, dude, like the tokens that were ripping higher, they were like the worst type of vaporware possible.
Yep.
But it didn't matter because the hype was what mattered. The
Yep.
momentum was what mattered. But the difference now is that the base chain has matured over the
It
last
has.
couple of years.
Mhm.
Multiple billions of dollars in TVL now. And the protocols that I mentioned, these are successful businesses. And so that's what Mike was talking about. When we're talking about like a culling, the tokens and the protocols that are not successful businesses, they will lose TVL and lose relevance and eventually go to zero. But those that are successful businesses, like Aerodrome, I think that we're going to see continued adoption. The problem for me, though, is I still don't see the value in holding the Arrow token itself. Now,
Mm-hmm.
I know that if you had locked Arrow over the last couple of years, you generated like a 50% return year on year, something like that. But you're being paid in Arrow. And so if you're doing 50% APY, but the token is down 80%, then it's like, net net, what did you make? Nothing. You're
Yeah.
down.
Well,
So, um,
it depends because for a long time I know that because I've had Arrow locked for about 10 months now, and I've made huge profits because one, I locked about at the time it was about 50 cents, and I locked about 5,100 tokens, and so it was roughly $2,500. But I got the flight school bonus, which was about fifty
right.
percent, so that was like 2,600 free Arrow, and then both of those have been earning me yield over the past 10 months. So I've earned probably around roughly I have about 10,000 Arrow that I've managed to compound in there because of the weekly compounding yield. So there's a lot of variables in there. Plus, like right now, it's at about a buck 40 last I looked, and the all-time high is $2.20. And then who knows where it could go. So a lot plays into when did you earn that Arrow? What was the price point, at the time, as opposed to when you cash it out, the unrealized gains, unrealized losses, conversation. So you're right, but I think there's a lot of variables and nuances, to the conversation when it comes to a lot of these DeFi plays that we talk about.
Yeah. 100%. And that's the thing. But what I will chime in on as well is for the longest time, just like we had those like, horrible coins that popped up on base, we had good DeFi protocols pop up on
Yeah,
base, right? Just
yeah.
like the ones David mentioned. We saw good DeFi protocols bridge over to base.
Mhm.
But what still held me back from those points in time is like a lot of these I can get on Ethereum, or I could get them somewhere else where the majority of my capital is allocated, or
Mhm.
B, these protocols were reliant on the random like horrible tokens that we were seeing popping up on base. So like
Yeah,
with
Right.
with XtraFi, for example, right? Back in the day, at least, you'd be able to leverage on it. Well, what would happen is there would be a bunch of liquidity on Aerodrome for a specific token because of the hype. They'd be directing Arrow incentives there because of the hype. And then you would have what do you call it? Extra finance come in, and they would have a pool for this specific liquidity pool where you can go and essentially short out the exposure of the token. And then everybody would go and short that. And the only way they were able to short that is because there were those, in my opinion, pretty dumb people just lending out those horrible tokens, becoming exit liquidity. So that was like heavily reliant. The whole XtraFi model was, while a great model, heavily reliant on all the hype at the time. So when, in my opinion, we start to see, base truly do numbers more than it already is when we see like actual legit tokens that people wouldn't like necessarily have to go into DeFi in depth to get, but just tokens people would want to hold, ones that are exclusive to base, ones that pop up there, and that's like the only place you can buy them, so people have a reason to be on base other than hype, but because there's actually a good, strong project on there. That's kind of the indication that I see. And again, I'm a big like guy just for Ethereum. I truly believe in Ethereum. Solana, I was on there for a while. Still have a little bit over on Solana, but not a huge fan of Solana, just because it's infinite inflation, and eventually they won't be able to pay out the people that are staking Solana. Just because Solana will keep going down and it'll flywheel to death unless they change the model, which maybe they have plans to do so. But other than that, like even with Sui, like we saw a lot of great protocols over on Sui, but and I'm sure Sui is a good chain, and Sui assets, sure, I'd love to hold that. But then like you go over to Sui and the only thing you can do is like pair it with USDC. And I'm like, well, I don't want to sell Sui as it goes up, right? And then you have all these other tokens on there on Sui that are just random meme coins, horrible tokens, right? The hype-based stuff that you don't necessarily want to invest into. So that's kind of my process when evaluating chains and stuff.
Absolutely.
So Jake,
Yep.
let me add something about Sui real quick. So Sui is an example of a high FDV, low float project where the fully diluted valuation is much, much, much greater than the current market cap. And so what that
Yep.
tells you is that, it's very inflationary. And although the max supply of Sui tokens is capped, until we get to that cap, which I think is going to take another, like several 4 years or something like that, maybe longer than that. I don't recall off the top of my head how many years, but Sui will continue to be extremely inflationary.
Yep.
And you see all of these token unlocks, almost every week, and they're not small. We're talking about large token unlocks for Sui. So yeah, I agree with you, Jake. I am 99% on Ethereum. I hold a little bit of Solana, but yeah, no, I operate on ETH mainnet. And one of the things that kept me from really moving to base was the lack of liquidity. So, if I need to perform an operation on mainnet, I can be, fairly confident that there are going to be deep pools of liquidity for me to be able to do that. But on base, only recently has that started to become true. So, yeah, I think that Base does extremely well. I think that we see more adoption because of the partnership with Coinbase. And yeah, man, very, very bullish on the quality projects on Base. As there's got to be some type of value accrual mechanism to the token. That's my problem with Arrow. My problem with Arrow is that it's not like you earn any type of dividend yield holding Arrow. You've got to lock it. Um, so, and it's so inflationary. I remember when Aerodrome launched in August of 2023. I was trading on Aerodrome the week it launched, and the Aero token put in an interesting pattern. All it did was go down. Like that's all it did. And then Coinbase announced, the partnership and investment, and then all of a sudden Arrow ripped to $2.30, and then it put in that same pattern again on the way down, ripped back up to $2.30 again, put in the same exact pattern on the way down. So it's an inflationary reward token, and the only value accrual mechanism is if you lock it and for 4 years. So I kind of expect Arrow to pump big, put in some big multiple, and then give it all back, unless there's some type of change in the inflation rate for Arrow. But
Mhm.
it's one of my favorite picks for this cycle. Arrow.
Yeah. Well, what I would say as well is like I'm in general not a big fan of Dex tokens, and there's a few that I will hold, right? And not even huge allocations, but what always just not upset, I guess upset me about Dex tokens is the exact model. They go and they just give away a bunch of their tokens, right? And when I look at it from the perspective of a yield farmer, from an accumulator, right, from any perspective that logically makes sense, well, if I have, let's just say, ETH paired with Link, and I'm getting paid Arrow, right? Naturally, I want more Link, right? So I'm going to go sell that Arrow for Link. Let's say I'm a yield farmer. I'm paying my bills with this stuff. I need to go sell that Arrow to put it in US dollars. I can't go spin that Arrow. Even if I did go spin that Arrow, they need to sell it to pay their operations, right? Um, so ultimately, in most case scenarios, unless you just want to be a part of the flywheel, you sell those tokens in order to translate them into real world dollars or translate them into further portfolio gains for the assets you're bullish on. So Uniswap, well, I literally have probably, I want to say $55,000 on Uniswap right now. And I love the platform. It's where I trust all my money, right? It's like I won't hold Uni token, maybe like 500 to $1,000 or so, but I won't hold Uni token. And the reason why is because there's still a bunch of people that got paid out a bunch of Uni tokens from the early incentives, and then at the same time, there's a bunch of like large holders that just sway the governance votes with it, right? And so you hold it for governance, but reality is your vote doesn't matter, even if you have like $5 million of Uni, you're not swaying anything. And then at the same time, there's no revenue sharing or anything like that. Now, Orca, on the other hand, and I believe Radium too. And then I also think over on LFJ, they do it, and maybe they do this with Meteora. But some of these tokens, they have a very simple model, right? It's like, okay, look, a dollar of fees comes in. Well, 90 cents goes to the liquidity providers. The other 10 cents goes to the people holding the token. And that right there, the simplest yet most effective model, in my opinion, right?
Yeah.
Simplest yet most effective model. Just because they're just taking some of the revenue and they're just sharing it with the token holders instead of, governance, lock it up. And then, like with Arrow, it just seems so like convoluted in order to achieve like a goal. Like you're going to get Arrow tokens, you're going to lock them. And then once you lock them, you're able to get VE Arrow, where you can then go and say, hey, I want to vote for more incentives in this pool. So that way you can get more Arrow in that pool. And then now you get more Arrow and you just repeat the cycle. Like it's a model that keeps you in the ecosystem, which isn't a bad thing. But
that VE33 model that Black Hole and Arrow both use, and Velodrome. Velodrome team is the one that built Arrow. So it's a little bit different than that. So I have two locks. My flight school bonus I kept in the VE Arrow Maxi Relay. So it auto votes for whatever's going to make me the most. And yes, you are correct in that case, because that's paid out in Arrow and auto compounds. However, if you're manually voting, it's basically unstaked. And so like today is or tomorrow, or actually no, today is the end of the weekly epoch. And after this show, I'll be voting. The ones that I manually vote on, actually, I'll show you real quick. I have it pulled up because I'm getting ready to vote.
Mike, I'm super curious. What's your voting strategy? Because, dude, sometimes it can be like, you're probably better off just guessing. It's so random sometimes because of that relay voting period. You don't know what the outcome of that is going to be.
So there's a strategy. So me and my community, what we do is we wait till the very end of the epoch, because I was doing it before. I was voting at the beginning, and somebody can add incentives. The APRs change. A lot of stuff changes towards the end. So basically, what I do is I come in here, I can sort by VAPR. And even since we've been live, some of these went from like 60%. Now the highest one is 37% because people are catching on to doing this towards the end. Now, if what I look at this is Coinbase wrapped ETH, obviously, and Spectra, Seam USDC, USDT, USDC, wrapped ETH, and this is that Arcadia Finance token. So what I can do is I can look at these, but whichever one I select, like say that I go and I vote for this Coinbase wrapped ETH Spectra, that is what I'm going to get paid out in. So what Jake said is true. You get paid out in Arrow if it's or if it's staked basically in that VE Arrow Maxi Relay and auto voting. If I'm manually voting, I get paid out in the tokens, the two assets for the pool that I voted for. I can choose to hold those. I can choose to sell those and buy arrow, and increase my position. There's a lot of different things I can do with that. But a lot of what you both said is 100% true. You have to be, and I tell this to people regularly, if you are going to max lock for 4 years, make sure you are very bullish on arrow long term. Because again, you can look at the chart and you can see that, where are we at here? Oh, here we go. Um, you can see that there's pumps and then it dumps. It pumps and then it dumps. We're pumping right now, and it's probably going to dump again. It's you. There's going to be this ebb and flow, and a lot of people like to compare it to Uniswap. I don't think that that's an accurate comparison, seeing that Aerodrome is base only, whereas Uniswap is like 36 different chains or something like that. So there's a lot more potential for liquidity and TVL on Uniswap as opposed to base. That could change, as the base chain matures, and some of this liquidity that's going to be injected from Coinbase itself because of the amount of people that are using the base platform. Time will tell. But I don't want to diminish what it is that you're both saying, because it's 100% accurate.
Yeah.
You can't marry or get emotionally involved in the projects that you like. You have to
Yeah.
see the negatives. Whenever you're at the club and the lights come on, and you're the girl that you're trying to hook up with, you have to be realistic and be like, oh damn, like, all right,
Hilarious example.
okay, you know what I mean? You've
Yeah,
got to
yeah.
be realistic about the negatives and the positives about your investments. If not, you might as well throw a dart at a dartboard. So,
Yeah.
um, there
Well,
is. Oh, go ahead. Sorry.
no, I was just gonna say more of like what I was saying is like, and I guess it comes down to the strategy and it comes down to the goal. Like, what's the reason? And I'd love to hear more from like David too, to hear his thoughts. But like, what's the reason you think that these people go and create a model like this where when you stake your LP token, you get arrow, and then that arrow you flywheel it is what they would call it. And then ultimately you kind of get the fees back when you like lock that arrow, as opposed to just having a simple model where you can go and buy up some arrow, right?
Mm.
You get to share the revenue, and then as a liquidity provider you get the fees, which I know if you don't stake it you get the fees. But yeah, and maybe it comes down to like you're not supposed to buy arrow, you're supposed to accumulate it. I know that's one of the big things in the V33 models. You're supposed to get the reward token for free. But yeah, and then we've seen like other models like Ramses and some of the others where they slightly tweak it and you get some fees as well as you also get the incentives, which in my opinion is a lot better of a model because you're doing your compounding into the liquidity pool with the fees that you're getting, and then you're getting what do you call it, the reward token that you flywheel and everything like that, if that makes sense.
Mm.
Yeah,
I
so
mean,
Jake, I think,
so go ahead.
yeah, Mike. So I think what Jake was saying is, you know, why why would you hold Arrow? You know, and why did they create this incentivization mechanism in the first place? I think that it was just an easy way to bootstrap liquidity.
Hmm.
Um, that could have been one of the reasons why, I don't have a window into the minds of, the guys at Aerodrome or Ace who built this product. But if I had to guess, it was probably just to bootstrap liquidity and be able to, make money and have the protocol continue to exist. But do I like incentivization mechanisms like aerodromes? No, not particularly. Do I think that Arrow, the token, will pump and put in some great multiples? Yes, I do. I don't think it'll hold on to those gains, though. I think that Arrow should probably be trading for like a penny or something like that. I think it's just about worthless, but I think people believe that it's going to pump. And so that alone will probably, make it pump. But yeah, no. I prefer to provide liquidity on Uniswap. I prefer not to earn a native DEX token or a reward token. And
Yeah.
the only reason why I'm so bullish on DEX tokens right now is because if we're about to see a rotation from ETH into alts, then I think that, Jake, the DEX tokens you mentioned, Ray and Orca, Cake and Uni, maybe Arrow. I also like Pendle.
Mhm.
I think that we could see these tokens rip higher. And would I hold them long term? No, not at all. But
Yeah.
maybe for 4 or 6 weeks, sure, sure. So that's the way I'm thinking about these.
Yeah.
Well, one
100%.
thing that I've advantage that I've had and that I've noticed is by locking Arrow weekly, I'm getting paid out in a lot of times tokens that I otherwise might not have looked at, like Rise. Rise has been pumping lately. It's a tokenization play on base, and I just, it was one of the top AP, VAPRs one week, a couple weeks ago before it started pumping, and I took my yield in that token. After I did a little bit of research and started building a bag of it. And so, it's a way to start out, different different bags of different assets that that you might not otherwise get exposed to. That's, I mean, one thing that I've noticed. The other thing that I've noticed is that these native tokens on, like, you got Velodrome, you got Black, you got Arrow, things like that. um I think a lot of it is that the value is people wanting to earn yield, passive yield, without having to deal with liquidity pools. So it's almost like a savings account, because I know with Aerodrome, they're paying out a lot of the fees that the Aerodrome platform generates, gets almost entirely given back to BE Aero holders. So it's almost like owning a like stock in the company. I mean, that's kind of what is getting paid out. I know people don't want to hear that because I would make it a security, but in a way, it is kind of a dividend.
Yeah. Okay. Well, one of the arguments I would also make to that is, like, with Aerodrome and the V33 model, I feel like it's heavily reliant on not going and buying the token, but rather getting it as incentives. Just because of the
Yeah,
inflationary mechanism and stuff. Which, in my opinion, it's, I don't know. It's like, it's hard for me to go, and again, like, this just comes down to, I wouldn't hold Arrow, and that's my thing. But it's
yeah,
hard for me to go and buy Arrow and then lock it. Now, if I was like, with liquidity pools and stuff like that, running a strategy like that, maybe I'll go and I'll lock some Arrow and I'll let that produce me income. I'll do the votes and everything like that.
mm,
Um, but, like, the majority of that, if I want to accumulate a specific asset, which is kind of our strategy, um we're just going to sell it to get back into a liquidity pool. Or one of the things that we do often is, like, we're, say, in Ethereum to Link, and we want to accumulate Link. Well, we're just going to sell all the Ethereum portion of the fees into Link, and then we're going to take that Link and we're going to throw it over on Aave. We're going to lend it out, we're going to borrow some USDC, we're going to lever it up, right? And we're going to ride the upside. And then eventually we'll get out of Ethereum to Link. We'll probably keep the Link, switch the Ethereum into a different liquidity pool, and repeat the process. So, like, I guess it all comes down to the strategy and what you're trying to do at the end of the day. And I don't think, Arrow's a bad protocol or anything like that. I think they have very, very good, like, tokenomics. And I think certain projects that, like, if you see Aerodrome, a fork of Aerodrome, which, Aerodrome's a fork of Solidly, if you see that launch in another chain and then you see another one launch on that chain, it's very, very unlikely that you'll see two survive on the same chain, right?
mm.
The reason why Aerodrome survives is because there is the community behind it. It is one of the largest, if not the largest, on base, for protocol wise. I know Dex
It's the
wise it is.
largest.
Okay, gotcha. But, like, the community is the big aspect, and there is a big speculation aspect of it, and for, like, in my opinion, it's hard to speculate on 4 years out what's going to go on, especially if they're putting in, a bunch of Arrow tokens into circulation to pay out these liquidity providers, basically. So that's my only concern with it. So
So,
No,
Mike, Jake,
oh, go ahead. Sorry.
Mike, I want to ask you a question. I know that you and I both hold Arrow locks. Have you come across OpenX swap before? Because now that Arrow has pumped against its US dollar pair from my entry on the lock, which was at like 70 cents, I would really like to exit the lock early, and you can do that on OpenX swap. So I just don't know. Have you come across this before? Ever used it?
No, I
It
haven't. I know that our locks are NFTs on our wallet, and I know like OpenSea and stuff like that that you can post those there and sell them to other people. Obviously, at a loss because basically they're going to have to hold that asset or that lock for however long is left on it. So no, but I haven't seen the one that you're talking about.
Well, I
Yeah,
was gonna
yeah.
say
So you can, yeah,
I've seen OpenX swap even though I don't hold Arrow token. Um, but but yeah, I mean it's a good concept. The only thing is, unlike a standard liquidity pool, it relies on somebody buying it from you, and somebody has to go and essentially pick up your position. There's also, I was just doing some quick googling, something called Vexy.fi, which is another one. It has on the V Arrow market has like 7-day volume of 2.2 million.
Mhm.
So yeah,
Well, real
So
quick.
Jake, you said what's
Oh,
the
sorry. Go ahead.
URL for that one? Vexi.fi or BEXI?
vexy.fi.
Cool.
So I mean we've hit an hour, and I just want to be respectful of your guys' time. I mean we can go as long as you want, but I know that David, you were wanting to talk about a Pendle Morpho connection or something. If you want to dive into that real quick, and before you do,
Sure.
I think it's interesting because I actually did a video the other day on a Plume Morpho connection to where using Mystic, they actually uh, use Morpho as the not the custody, but the pools or the vaults on Morpho to basically earn yield for people, kind of like how Mamo uses Moonwell. So I kind of really find this interesting. You're starting to see this cross chain, sharing of liquidity almost. But yeah, tell us what you were wanting to talk about with Pendle and Morpho.
Sure. So on Pendle, as we've seen ETH rip higher, a lot of the stablecoin PTs, users have been selling those stablecoin PTs prior to maturity. And that has the effect of driving up the implied APYs on those PTs. Now, implied is equal to the fixed yield that you earn when you swap into a PT. So I'm not sharing my screen here, so I can't draw or anything. I'm just going to talk through it. But
You can
over
share your
on,
screen if you want.
yeah, it's okay. It's okay.
All right.
I can talk through it here. So
All right.
for Pendle, one of the most important things when I'm taking a look at stablecoin PTs on Pendle, and we're going to loop this into Morpho in a second because Morpho is where you can lever up these PTs if you want to. But the most important thing for me when I'm taking a look at stablecoin PTs on Pendle is the underlying asset itself. That's the single most important thing. You've really got to understand what are these yield bearing stables because there are so many yield bearing stables now, and on multiple chains, all sorts of different custodians. So you've really got to do your due diligence on the stable coin first and foremost. That's the first thing. The second thing is I'm looking at the time to maturity. So if you're on Pendle right now, and let's say that you're looking on mainnet. ETH mainnet is where the majority of the liquidity lives on Pendle. And you've sorted for only stables. And then after you sort for stables, or filter for stables, then you sort by fixed APY. What you're going to see is there are a handful of PTs where the fixed APY right now is between 34 and 37%. Now, why is that? Well, because there's only 2 hours until maturity. So what is the optimal maturity time frame that I'm looking for? Well,
Mhm.
at least 60 days. I'm looking for at least 60 days out. And now, since you're operating on mainnet, oh, well, you don't have to operate on mainnet, but I choose to operate on mainnet on Pendle. You've really got to take into consideration your position sizing. So if your position is, let's say, 1,000 US dollars, but you're operating on mainnet, well, gas is going to eat into that on entry and exit. And you're also going to have some slippage on entry. Now, if you hold a PT until maturity and then redeem into the underlying, you will experience zero slippage when you exit that position at maturity. But if you choose to exit a PT position prior to maturity, remember the only market to trade these PTs is on Pendle. And so if you have to exit a PT prior to maturity and the only market is on Pendle and the slippage is 5% and you've got to exit, you have no choice. You're going to end up eating that slippage and the gas associated with it. So you've really got to make sure that you understand the underlying stablecoin or asset, that the maturity is at least 60 days in the future, and that you're willing to hold to maturity. So those are just a couple of things that I'm looking at when I take a look at stablecoin PTs on Pendle. Now, right now, there are some phenomenal opportunities on Pendle. Now, why is that? Well, because ETH has ripped higher. And so it's, there's less reason to hold a stablecoin PT paying you, 9% fixed if ETH is ripping higher. And so what I've seen on Pendle is a lot of holders of PTs have been exiting their PTs prior to maturity, which has the effect of pushing up the implied APY, which is the fixed yield that you earn when you swap into a PT. It's referred to as fixed state, fixed rate yield. It's fixed yield. And so right now, just taking a look at some of these higher quality yield bearing stables, I mean, you can earn 15, 16, almost 17% for the next between 60 and 170 days on Pendle. And that's fixed. So you could actually build a bond ladder portfolio using just these stablecoin PTs on Pendle without any leverage at all, if you choose not to use leverage. Now, let's say that you want to use some leverage. The first step would be I would head on over to Contango, contango.xyz.
I
Now, the
actually
reason
was
why,
looking. I was looking at some looping that you can do with Contango. I'm glad you brought that up.
yeah, so that would be the first step. I would head on over to Contango, and once I'm on the home page and the top like menu bar up there, you're going to click on Simplified. And then once that loads, you're going to then click on USD rates. And the next thing you need to do is where it says estimate market impact on rates, you need to give it a minimum amount to invest so that you filter out all the stuff with no liquidity. So I would say the minimum amount to invest would be something like $50,000. Now, that's not saying that you would need to invest 50,000. I just don't want to see any pairs that are illiquid. So first step, make sure that you're on the USD rates and then enter a minimum amount to invest. And then you could enter even a minimum ROI if you want to also. Now, on Contango, they use the terminology ROE, which is your effective return on investment until maturity. So let's just take a look at some of these on Contango. Now, what I'd like to use Contango for is as a filter. It's a screener. So if I see an opportunity that looks interesting to me on Contango, well, I've got two options. I could open the position on Contango, but that is like a self-contained trade. You wouldn't be able to, go and borrow against your PT further if you use that PT on Contango to lever it up. So if you're on Contango, you're trading on Contango. But I like to use Contango for the screener and then go and enter the opportunities that I find manually. So after I found something that looks interesting to me on Contango, then I'll take a look at the money market. So, maybe Aave or Euler, or just scrolling down through some of these money markets, Morpho is another. So between those three and Silo also, you're going to see the majority of the opportunities there are between those four. Aave, Morpho, Euler, and there's
Oh,
some that pop up on Silo.
check this out. So remember I was talking about the connection between Plume and Morpho? This M
Yeah.
basis is actually on Nest protocol that's on Plume Network. And it is one of those that I was talking about that's tokenized real world assets. It's a basket of tokenized RWAs on Nest protocol. So it looks like that this is utilizing that, and this is what I'm talking about with these connections between these different protocols and different chains. That this cross liquidity is kind of what I'm starting to refer to it as. But yeah, sorry, I wanted to point that out real quick. But I think that whenever you have time, David, let's schedule something. And Jake, you're more than welcome to join. But let's do a deep dive on Pendle. It's something I've been meaning to do, and maybe do a tutorial on Pendle because it's so unique with the PTs and the YTs, and then the looping that you can do with Contango.
Oh yeah, man, for sure. And Mike, Jake, I just want to give a big shout out to Steven TCG because the content that he has put out about Pendle and Contango and too many protocols to name here. He's done a really great job, and yeah, I learned a lot just from learning from him.
Yeah.
So there's a specific strategy that he has a video on his YouTube channel. It's
What
called
what
a
is
cheat
what
loop.
is his YouTube channel called? I'll pull it up real quick.
Jake, what is it? Is it DeFi Dojo or it's Steven TCG?
Okay, I know who
It's
you're talking about.
Yeah, it's Steven TCG, I believe. He's the calculator guy, they call him. But then he has a Discord called DeFi Dojo, and I think it's like $100 a month. If you're like advanced into DeFi, or kind of like understand DeFi, wanting to take things like further and kind of learn these like strategies, they have a really, really, really good group. Now, if you're more on the beginner side, good
Yeah,
luck
no,
in there.
like I said,
Because
yeah, he's
because
like,
yeah,
yeah,
but they're top notch with strategy. Don't get me wrong, they're great. And I gotta give credit where credit's due. And what's his name? One of our affiliates, Float Locker. He's pretty active in there. And Float Locker really good with concentrated liquidity strategies and everything like that. Too. So just wanted to give a big shout out to those guys. But yeah,
yeah, no. So yeah, let's get something on the calendar to do that deep dive. But yeah, I believe David, I'm glad you brought the DeFi Dojo up because I believe that's where I saw the Pendle looping with Contango initially, and it really got my gears churning. And I really like what you can do with stables because I do want to lever up my risk and my earning on some of my stables. I mean, some of them I want to be, kind of risk off and, earning like 10% or, whatever. But I definitely want to use a small portion of my treasury to, lever up to, bring my average, APR up for my treasury. But, well, I mean, any closing thoughts, Jake? What are your closing comments?
yeah, well, what I want to leave it at is I'm starting to see a lot of cool stuff pop up over on Hyper EVM. And I'm not, a big one to like chase the trend like when we saw Sonic and Barachain and stuff like that. Like, but this time around with Hyper EVM, it's relatively interesting because they had Hyper Liquid, long before they had Hyper EVM, and you see a lot of like easy migration, and you're starting to see like actually some decent solid projects pop up over there, especially on the DeFi side of things. So just to show you guys, and I could share my screen over here, um,
Oh yeah.
Mike, what, there we go. What we got over here is basically, I'm using Project X. It's prjx.com. And then there's also another large one called HyperSwap. both of these are Uniswap v3 forks. So you're not necessarily taking on a ton of inherent risk diving into a new protocol with 80 million in TVL, because it's the same contracts that Uniswap kind of has. And from the looks of it, based on what PRGX is tweeting and stuff like that, they have plans to have like a DEX aggregator over here, along with some other stuff that'll be coming soon, which is pretty interesting. But what I'm personally in is, let's see, this hype to UBTC. Now you'll notice I'm losing compared to holding the market right now by about 178 bucks. So, the volatility in the market is definitely
Clutch
taking a
the
little bit of a
pearls.
toll.
Clutch the
Yeah,
pearls.
but hype is pretty correlated to BTC. I would not be doing hype ETH, but I would be doing hype BTC, just because they have a pretty solid correlation. And ultimately, with this liquidity pool, it's been able to produce around a 76% APR. I don't have a crazy tight range. Like you'll see, I have basically 25.46 to like 34.17. Needs some adjustment now. But yeah, I mean, overall, I've been pretty happy with these results because I've also captured the upside that we've seen in the market without having too much divergence loss compared to the fees. So PRJX is one. The other one that I'm looking at, I'm just going to pull it up as well, is Hyperswap. And they're doing some cool stuff as well. It's just at the time I kind of threw about 20K in blindly on PRJX just because I didn't have like a way to backtest results or anything because we didn't have it on metrics at the time. And PRJX was the only one that was showing actual simulation of the APR, which even then was wildly inaccurate. Showing I was going to get like 150%. But yeah, both of these great protocols, both supported on metrics. And then in the meantime as well, I do want to like give a big shout out to Matcha. I kind of mentioned this earlier. This is something that I've been using recently. I used to use Llama Swap like all the time, and Llama Swap's still great. I started using Matcha because I found that I'm getting better outcomes out of these trades. So like if we go back to like the roots, right, which is something that I've been doing recently because we're working on some cool stuff, like and trying to shift the content more beginner friendly that I do. But like if you buy USDC on Coinbase with ACH, you're getting it at a 1-to-1 rate, as I mentioned. Like I'm not using Coinbase to hold capital to buy crypto assets or anything like that. I'm using Coinbase to bring on some USDC and instantly transfer it to my DeFi wallet because I could get that at a 1-to-1 rate. And then I could transfer it to my DeFi wallet at a 1-to-1 rate. Maybe pay a dollar if I'm on Ethereum.
It's free to move it.
Yeah. So just like in perspective, what I want to show you guys, and again, maybe some of you are making trades like this. Maybe others are making smaller trades, but equate to this over time. If we were to go and buy, say, $50,000 of USDC over in Coinbase, which is not going to let me because I have a $35,000 daily limit. So let's use $35,000. Otherwise, it won't simulate it. And let's do ETH, right? 35,000. We're going to get out about 7.164 ETH whenever we buy that directly through Coinbase. And what they don't show you is and they do show you, but it's very, very hidden. You're paying a price of $47.97 for ETH. And then if we just scroll down over here, you can see that the actual price is $47.45. That is the hidden killer because that is called a spread. They charge you more for it. And that's actually a 1% spread, as you can see right here. And then if you don't have Coinbase One, which is $30 a month, you pay $650 in fees. If you do have Coinbase One, you have up to $10,000 per month in volume fees waived, right? So in this instance, it would charge me fees, which is 2% roughly, on 25 grand instead of 35 grand. So that's why we always buy USDC, because going over to Matcha, we're getting out 7.373 Ethereum, which is basically roughly like 0.2 more minus some 164. You can see we're getting out 0.2 ETH extra, which, on even 47.50 roughly, $992. We're getting out $1,000 more, and when you look at the opportunity cost, which is something that not a lot of people do, well, what happens when ETH is one day at $15,000 or something like that, or even $10,000? That all of a sudden becomes a lot greater. Like if we just multiply that by 3, that's $3,000. Multiple buys over time, and it stacks up. Don't forget the yield opportunity cost that we could be earning on that fee as well. So using platforms like Matcha, Llama Swap, Odos, these are all great platforms. You can avoid these super high fees. And as I was saying earlier, you basically are getting paid to trade these assets, because when you use platforms like Matcha, you're supporting the kind of arbitrary nature of DeFi. Because the only reason why a Uniswap liquidity pool, a Aerodrome liquidity pool, right,
Is the
would be the
swaps.
price that it is today is because the arbitrageurs are keeping it in check. The only reason why Ethereum trades similar to Ethereum on Coinbase as it does Uniswap is because there's people that are buying Ethereum over on Coinbase, selling it on Uniswap, buying it on Uniswap, selling it on Coinbase to keep the prices in check and to arbitrage it. So when you use aggregators, it makes sure that you get the best outcome out of your trade, and they're getting more and more advanced. So as you can see in this instance, like I'm putting in basically 34,995, which I would just consider $35,000. I'm getting out $35,012. In this instance, now I'm only losing $10, right? So it will constantly switch, but you could get a very, very good outcome out of your trade. And I do want to disclose, we have a little bit of a partnership with Matcha. We don't get paid. Our
Yeah.
community gets paid. Basically, they wanted to partner with us. We're like, hey, we don't really care about the thousand bucks you're giving us, so we're giving that away in our community, just a
Nice.
$1,000 best strategy, or whatever. But like, yeah, even then, Matcha, great platform, been using it for a long time, and highly recommend it, regardless of if they're giving away money to our community or not.
So it is a DeFi aggregator.
Yeah, it's an aggregator. It's not a
Okay.
DEX itself, but rather it scans all the DEXs. And then you execute your trade directly through here, and it will make sure that you get through the best DEX. And if it has to put you through like 10 DEXs or something for your trade, it will, right? It'll swap some USDC for Ethereum, for some Bitcoin, and then to some Link if it really needs to. So, yeah.
Awesome. Well, those of you that maybe aren't, following Jake Call already, it's just Jake Call on YouTube. And again, I highly suggest it. There is a free version and a paid version, but Metrics Finance. It is really great to simulate, potential entries into liquidity pools and what you would potentially be looking at as far as what yield you would be earning, things like that, track your portfolio and its performance, that sort of thing. So appreciate you, Jake. Really looking forward to doing this every week. I think this is going to bring a ton of value to the community. So David, closing thoughts from you.
Yeah, I agree with what Jake said about how hyper EVM is somehow different than, the previous, really hyped chain launches like Barachain, for example. Um, there is definitely something different about hyper EVM. And one of my favorite stablecoin opportunities right now actually is on Hyperbeat. And so, Jake, I know that you've got the screen share up. Can you bring up Hyperbeat real quick? The URL is hyperbeat.org. And if you, after bringing up hyperbeat.org, if you click on MorphoBeat up top there is one vault. If you then sort by supply APY, the USDT zero gauntlet vault, and also you could take a look at the vault managed by MEV Capital. But 15% on USDT zero single lending is pretty attractive. But that's just the first piece of this strategy. The first piece is single lend USDT on Hyperbeat on Hyper EVM. The second piece is deposit the receipt token onto Rumple and monetize those points for an additional like 40% APY or something like that. I'm in this position right now. And, again, shout out to Stephen TCG for making me aware of Rumple. But one of the best single lending stablecoin plays out there right now. Because, if you just take a look at Rumple, for example, and the URL, Jake, for Rumple is yeah, there it is. Perfect. So, yeah, man. So,
No VPN on
the
today.
oh yeah. So right now it's like 43% to single lend USDT on Hyper EVM after monetizing those points. So that is something that I've definitely got my eyes on here. Um, but as far as what I'm looking for in markets over the next couple of weeks, I am eager to start taking some profits on my trade on ETH. And like the moment that we get up to 4,900, I'm definitely going to lock in some gains there. Bitcoin, as we've been speaking, the futures market, the CME futures market, put in a fresh all-time high. So the Bitcoin CME futures contract put in a fresh all-time high. The spot market on Binance is 300 points away from putting in a fresh all-time high. And so the way I'm thinking about this is if Bitcoin starts to rip a little bit and ETH puts in a high, a fresh all-time high, for me, that's going to be the indication to take profits. And that's what I'll be doing. And then, you know, I don't know what to expect out of September, but if the halving cycle analysis is correct, then we should expect a red September. So I'm thinking we get up to 49 or 5K on ETH, we break to some fresh all-time highs on BTC, I'll take profits, and then just sit and wait for some rotation into alts. I'll be taking a look at alt ETH pairs. I really want to see alts start to move higher in ETH terms. What I would really like to see is that rotation begin from ETH into alts, where ETH holds on to its gains, and then you just see alts pop off one after the next. Big numbers, big multiples. So right now, I'm just patiently waiting. Exactly. I'm just patiently waiting for 5K and 123K plus on BTC so I can take some profits and then watch the market for a good entry on some of my favorite alts. So I know I'm pretty bullish on DEX tokens right now, but I'm sure that there's going to be so many more opportunities out there. So that's what I
Yeah.
got for you guys.
Well, yeah, I was just gonna finish that off by saying Bitcoin's hitting all-time highs while we're in this call, and then on
Yeah.
top of that, Google, on the other hand, on their Play Store is like banning non-custodial wallets. So like
Yep.
Trust
Somebody in the chat
Wallet,
was saying that earlier.
MetaMask, and I'm like thinking like, what's going on? Like, Google, come on now. So safe to say, a lot of people will probably be switching over to Apple after that. But yeah, I'll let you take it from here, Mike.
Yeah, no, I mean, pretty much, I can't stress enough. I mean, the chat is loving this, this collaboration. Just the amount of knowledge that both Jake and David, that you're bringing to the show. And yeah, I mean, I really think this is going to bring a lot of value, to the to the community and just people that are interested in DeFi, all the way from the beginner all the way up to advanced. I'm excited. I'm excited to do this every week. I mean, I know that I learned a bunch, just from listening to you two. Because again, I've only been doing DeFi for about 10 months now, and and I know I still have a ton to learn. It's I'm still on my journey, and I know that you guys are probably always learning too, because there's new protocols popping up, there's new advanced strategies, with different ways to loop and different ways to different ways to earn. So yeah, it's really, we're at a very exciting time right now, and I really think that if you're out there wondering if you're late, don't worry about it. I really think that you are still very, very early to DeFi, and the integration. I call it the retarded fish frog baby of TradFi and DeFi and what it's going to become, and the liquidity that's going to be injected into this. Um, but please make sure that you're not chasing yields, and make sure that you're making smart moves. Don't try to get rich quick in DeFi. It is a marathon, not a sprint. If you want to take a small portion of your portfolio and you want to play with memes, or you want to try trading or something like that, absolutely do what you got to do. I'm not a financial advisor. This is not financial advice, but I have found personally with DeFi, slow and steady wins the race. Just getting into good pools, getting into good positions, making sure that you believe in the assets. There's good TVL, there's good volumes, wide ranges if you're doing ranges, especially during um, uh, you know portions of high volatility. When we're trending sideways, you can tighten those ranges. Just make sure that you understand what you're doing. I call it crawl, walk, run. Start out with staking, lending, and then maybe, as you understand how liquidity pools work and how the assets are, sold off and how they move relative to each other, you know, then, maybe bump up higher into things like that. But make sure that you're doing things in a logical, well thought out way, and don't allow emotion to drive your investing, no matter what type of investing you're doing. So,
Mhm.
again, gentlemen, thank you so much. And I really am. And it looks like, judging by the chat, everyone is, and the couple of hundred people that we have, watching across different platforms right now, I think that this is going to do quite well. And so till next time, Veteran Crypto out.
All righty.